This video is about the world of finance. So I'm going to break down finance into two sections. One is banking and one is investments. So on the banking side, basically, most of the banks. There's Royal Bank, TD Bank, CIBC, and so on. And then there's also the credit unions. Which for the most part, for us regular consumers, they operate more or less like banks. Like banks, you can have, accounts, and you can get mortgages and loans and so on. So for all intents and purposes, they are very similar. And so in the credit union world, the biggest one is, of course, Van City, but there's other ones as well, Blue Shore Financial, GNF, a whole bunch of ones like that. So in the banking world, there's, what you see when you come into the branch is mostly, the bank tellers, and then you have the salespeople, and those people are selling you investments, they're selling you mortgages, and they're handling like your RRSPs and stuff like that, your investments, which basically is something that the bank is selling you, because the bank is making money from those things, of course. So that's at the branch level. All banks have head offices somewhere. For the most part, the big banks, the major ones, those will be in Toronto, but there'll be some kind of regional offices in like downtown Vancouver, most likely, for most of these banks. And at those kind of offices, you have a few more kind of jobs that people are doing. Whether it's often it's some kind of business analyst type job, unless it's kind of a clerical job. So those are there too. For those types of jobs, for all of these types of jobs, most likely the people working there have some kind of business degree or degree in business administration or something like that. And then as you move up the ranks into more senior roles and eventually management roles, I think it's likely that you would have some kind of master's MBA or something like that. So that's on the banking side. And then what about the investment side? So there is quite a bit of overlap, because banks also do investments. And so when you're talking about investments, you're talking about stock market stuff, you're talking about managing people's money, mutual funds, those kind of things. We will talk more about like how you should manage your own personal money, in later lessons. But for now, we're just talking about like as an industry and, as people working in it, like what you could possibly expect. So at kind of the lowest level, you have what you call the financial advisors. And so these are people who are like meeting with individual clients and basically saying, here, client, I think you should put like half of your money into like stocks. And then maybe you put a quarter of your money into, bonds or whatever. And then they may sell you some products that are affiliated with the company that they work for or the bank that they work for. Or they may, if they're taking a more active role in managing your portfolio, they may say, okay, let's buy 100 shares of Amazon, and then we'll buy 50 shares of Microsoft, and so on. And so that would be a more active role. In that case, most likely they're not getting paid by selling you the commissions or by the company, but they're most likely getting paid by the performance of your portfolio. And so if your portfolio makes such an amount of money, then they get a percentage of that. Or they could be getting a percentage of your overall wealth. So they say, I'm managing $1 million of your money, and so every year I'm getting like 2% of that $1 million, which is like 20,000, right? So yeah, there's different ways that it works when you're managing other people's money. Okay, another way that you can, another entry into this industry is if you are the mutual fund manager. So a very quick explanation for those of you who don't know what a mutual fund is. Again, we will cover this in more detail in a future lesson, but basically mutual fund is, instead of picking all the individual stocks, like I want 5 shares of Amazon, 10 shares of Tesla, and so on, The mutual fund manager is doing this work for you. The mutual fund manager says, Coca-Cola is going to go up in price. I'm going to buy, whatever, 100 shares of Coca-Cola. And, I think, I don't know, Old Navy, is that a stock? Sure, Old Navy stock is going to go up in price. I'm going to buy like 50 shares of Old Navy and so on, so that you don't have to do that work. All you're doing is, I'm going to buy Mr. Wu's mutual fund, and then he's going to take care of that for me. So if you are a manager of such a fund, then what happens is you would make, depending on how your fund does, say all the people who invest in your fund, and so all the investments that you make have gone up in value, say 10%, you had a good year. You would take 3% of that, or whatever what is called MER, basically is the percentage that the company takes as a management fee from the profits, right? So the customer, the customer's money made 10%, but the management company is taking 3 of those percents, and so then the end customer is left with 7%. So that's how those mutual funds kind of work. And so as the fund manager, you will be, getting a piece of that. There's mutual fund managers. There's also like researchers and, I guess mostly researchers. And basically they're like researching the company, so that they can predict if this company is going to do well or if it's going to do, poorly. So that's mutual funds. There's also something called hedge funds. Hedge funds are basically riskier kind of things. They're not going to buy, instead of saying, we're going to buy 100 shares of Tesla or something, instead they're dealing more in riskier kinds of what they call financial instruments. And so they might be saying, I'm going to use the money, this pot of money that I have, and use that to borrow a whole bunch of other money to create leverage, and I'm going to use that money to buy something. Hopefully it will make money, and if it makes money, then I can return a higher profit, but possibly it'll lose money, and if I lose money, that's really bad because I end up like owing more than I actually have. And again, we'll talk a bit more about these kind of ideas in a future lesson, but all this to say, most likely you wouldn't be able to invest in a hedge fund unless you have a certain amount of net wealth. I guess I'm not sure what the number is, depends on the fund probably. But it might be like, you must be investing $1 million like minimum, or maybe it's $5 million minimum. So really only the more wealthier people would be able to access those. But if you are a hedge fund manager, right, you're most likely, hopefully at least, making more money for your customers. And so for yourself, you're also making more money. What are kind of the numbers we're talking about here? Can be anywhere from hundreds of thousands to millions of dollars per year. Generally, these kind of jobs aren't really much available in Vancouver, so you'd have to go to Toronto, where for example, the bank's headquarters are. TD Bank headquarter, Toronto, and so the people who are running the mutual funds, the TD mutual fund, most likely based out of Toronto as well. One other aspect of kind of finance and investments to talk about, which is investment banking. So in investment banking, your job is to help companies either take their company public, so put that company onto the stock exchange in what's called an IPO, initial public offering, or sometimes your job is to do mergers and acquisitions. And so, company X buys company Y. Now we have to kind of merge them together. Usually in merging them together, you're firing like half the staff or something like that. And so if you are involved in the financial parts of that, helping companies to do that, that is, you're making, I guess, really, a lot of money. Those jobs are very difficult to get. It's very difficult to get into the schools that will lead you to those jobs. And this kind of stuff, you can't even do it really, I think, in Toronto that much. A lot of it is, like, most of it is probably happening in New York City, and Wall Street, if you've heard of that term. Okay, so that's kind of a very brief overview of finance, corporate finance. Again, you can make potentially, millions of dollars if you're kind of high up there. If you're just kind of a bank teller, you may be making, quite a bit less, 40 or 50,000 a year, something like that. So quite a wide range, and again, it depends like on your ability, your performance, your ability to kind of make contacts and networking as well. Okay, so that's it for this lesson, and we'll see you in the next one.